Sir, Vishnu sir.
Yes, sir. Good evening.
Yeah, let us proceed. Let them join. Let us proceed. Yeah.
So good evening to all the participants for joining today. Once again, on behalf of I welcome everyone on behalf of IIT Pune chapter, Buzz Engineering Academy and Civic Incubation Center. So our speaker for today is Mr. Vishnu Kumar sir, who is currently working as a chartered accountant from Tamil Nadu. And sir is going to be sharing his expertise today and guide us related to finance. And then in moving on session, we are also going to see the technical aspect of the finance sector. So sir, I welcome you on behalf of IIT Pune chapter, Buzz Engineering Academy and Civic Incubation Center. And I request you to please take over the session.
Thank you. Thank you,
Yes.
ma'am.
Yes, sir.
How screen is visible, sir? I've shared my screen. Is it clearly visible, sir? Yeah.
Yes sir, it is visible.
Thank you, sir. Thank you, IET and Buzz Academy for inviting me to the technical area of artificial intelligence, which is actually a gray area for us. We only have people who've been enjoying the benefits and the impact that is creating in our sector. In fact, the areas like investment, market investments, where a lot of AI tools been used for assessing the volatility of the prices, market trends, which is one area which can be discussed. But today, what I thought was, I've been so familiar in conducting a lot of bank audits and I've handled a lot of forensic audits and relevant to bank frauds and all. So I thought, how this AI been so helpful to say so precisely. Previously, this data analytics that we do from the information that we gather from the particular bank branches, it is not that easy to come to a conclusion or decision based on is this particular account subject to fraud or not, is this particular account to be classified as non-performing or not. What is the basis on which our opinion has to be at? Like that, we find it very hard to come to a particular decision or to make the decision. After implementation of certain AI tools, which we use in the banking sectors, it was very helpful in deciding as and when the events are happening. So there are a lot of red flags it raises, a lot of exception reports that we are generating in the banking sectors. So I thought I can share the experiences of how this AI impacts in banking sector. And also being a practicing chartered accountant every day in and out, we used to address different notices issued by revenue authorities like income tax authorities, GST authorities. Now these authorities also started introducing AI tools in assessing the income declaration statements. And a lot of frauds that were unearthed in the past 1 or 2 years, especially in GST, the fraud levels been running in crores and crores of money. They're also been assessed, and the precautions have been planned based on the AI tools, information on the AI tools, for which there are specific departments like DGG, Director General for Intelligence in GST Department, headquartered at Delhi. They used to gather information across the country, and in fact, they are gathering information and relevant to the events happening in the customs department and also within the country through GST. And they are coordinating the database, and accordingly, they are sharing the informations, and they are particularly pointing out the queries also, which were very unique, and that is the way they are minimizing the frauds. So first, we'll start with my banking experiences. What exactly happens because of this use of artificial intelligence? Because of this artificial intelligence, there are a lot of tools which have emerged, which helps in removing the intermediaries in reporting aspect, intermediaries in connecting people, or intermediaries in the process also. And another advantage is that there is no centralized server required by the moment the data have been accessed or been saved through use of all these AI tools. That is another advantages that we have in banking. And next is this credit scoring and risk assessment. Every assessee's credibility from the finance perspective, banking perspective, or arrive through a finance discipline for assessing a particular person, particular borrower, owner's financial discipline. It requires a lot of data inputs, and all those data inputs in relevant to his discipline of prompt payment and relevant to his past loans, past loan experiences, and his business natures. Everything has to be assessed and it has to be periodically reported. Based on that only we can decide on whether a loan can be sanctioned or not. That scoring areas and all that process been taken up by a lot of credit-oriented companies, rating-oriented companies like Chrysler, ICRA, CRA, like that. A lot of rating companies are there, and these companies started gathering data using these AI tools and from the internet. Like, for example, if I want to state, XYZ private limited company want to borrow a loan from so and so bank, for example, Bank of Baroda. Now, Bank of Baroda approaches Chrysler. See, we are ready to grant a XYZ private limited, but we want to know their financial disciplines, and we have got their financials. With their financials, we have not understand. We have only understand the financial position of a particular date and whether they made a profit or not. Beyond that, what about their financial disciplines? For that, Chrysler used to assess their repayment patterns, loan patterns, their sale patterns, everything. That information is what this Chrysler does is they get the information from Ministry of Corporate Affairs website, and from there, like there are a lot of available informations officially available in a lot of government sites, and some information they used to get through RTA also. So all these things they gather it, they rate it. Sometimes they personally visit the organization and do the ratings, and accordingly they are giving this credit scores. This was previously not as quick as we require. These reports are not as quickly we are getting it, but now we are getting everything on time. That is because of a lot of AI tools that these credit companies are utilizing. Fraud detection and prevention. This is the area I thought I have to come in detail, because you're all aware of how this AI processing, and because you're all from technical side, and you know how effectively we can create every single AI tools to be. But what is the actual requirement? What exactly is the need in banking? There are certain things which I've identified and I'm going to point here. First, at the operation level. At operation level, how to give early signals that this particular account is to be monitored, or it has to be monitored in a higher level. There are certain signs. These signs cannot be easily identified through manual verifications, or even through an automated process. It is not that easy to identify. So only by having a proper AI tools in place, we can easily identify. And that one particular point at operation levels or bouncing of high value checks. If somebody is receiving checks of more than 10 lakhs, 15 lakhs frequently, and he has serious pattern of bouncing of these high value checks, and that has to be particularly monitored. And this monitoring helps us to identify whether this person is proper in his financial discipline or not. And this is one criteria where banks use specifically on assessing their credit scores and also sanctioning of their limits. And second important thing in relevant to foreign remittance remaining outstanding for a long time. Here, banking windows, which they have for automation of this process, it only has the reports in relevant to how long this loan been kept outstanding. But this has no connectivity with, is it any particular regulations in Foreign Exchange Management Act, we shortly call as FEMA, or an RBI notification that before I can export, I must realize the export in certain timeline or not? Or do I have my own choice of having this outstanding for a period which I agree with the foreign customer? But in FEMA, we have a condition. We have a specific condition stating any export proceeds should be realized within 9 months. Whereas with the permission from RBI, it can be further extended for a maximum period of 15 months in case we have our own warehouses abroad. Beyond the period, if the realizations are not happening, then all the subsidies, interest, which an exporter probably would have enjoyed by the time when he exports it, all need to be repaid with interest and particular borrowing which he got from the bank, stating that he is going to make an export. at a subsidized interest rate. All those subsidized interest benefit that you have enjoyed, you need to repay. That is interest along with interest. And this are all very difficult to identify in the banking operations. By AI tools, we able to make a clear picture. Just one report that we used to ask for this particular point is we ask for aging report of foreign remittance spending or foreign realization spending against exports. That particular report aging and going one step further, it is giving a very clear report day-wise stating that these reports have been outstanding beyond the FEMA regulations and this has to be addressed, otherwise we have to penalize that person. So this is another point which AI has a great impact in the banking sector. And one more area, the under insurance, over insurance. All these are I'm talking discussion in the operation levels. How AI creates an impact at operation levels, which we are experiencing in every bank audits, content audits, statutory audits. Everywhere we are experiencing it, we are enjoying the advantage of it. Otherwise, going into a branch where we have thousands of bank accounts, it's not that easy to filter up the specific reports of a specific SSAs. Underinsured and overinsured inventories. This also has a huge impact. What is the huge impact it creates? Everything, if it goes smooth, then it's fine. Otherwise, if a person has a loan, working capital loan for some 5 crores, for example, 5 crores, this 5 crore working capital is purely based on the stock inventory that he has in the factory. And the requirement is he should possess at least 7.5 crores of stock to avail the benefit of 5 crores. Everything is well good. Even the it's also conducted through a third parties, and they have also said that the stocks are maintained at adequate level. Still, if the inventory is went shortfall, what happens is suddenly, if the inventories of that company, though it is valued in the paper and stated that it's 7.5 crores, it may have expiry attached to it. For example, if I'm maintaining an inventories of drugs and pharmaceuticals, medicines, and definitely over a period of time, its value will go immediately after the expiry date, value will go zero. There is no internal control for that. And suddenly, based on the obsolete stock, still in banks, they say by value, there is a physical evidence that the physical stock available to express 1.5 crores, so you can enjoy 5 crores limit like that. They keep on enjoying the limit for which they may not have the proper stocks. And they may have insured also. If a proper insurance is on place, and by the time this stocks getting absolute or expiring, this insurance companies also will get an alert and they will also start giving information to the bank. And these alerts has to be given by a proper tool, and this is happening only after the intervention of AI tools in the banking sectors. Then the frequent HADAC sanctions. What is this term called HADAC? HADAC is something like I'm only enjoying a limit of 1 crore borrowing limit with my bank. Now I've suddenly got much higher orders than what I've expected. Now I'm running out of working capital. Since I have higher orders, what I'm asking is, sir, kindly sanction me a 20 lakhs in addition to my 1 crore so that I can meet out the temporary working capital needs because of higher orders. For that, banks has the permissions to sanction the additional limits without asking for additional collaterals or security. But this is too risky. And this additional ad hoc sanctions can be made only for a maximum period of 30 to 90 days. Beyond 90 days, it is violation if any ad hoc sanctions are not closed. These two key points, these is also not that easy to identify. Because they say, I've sanctioned an ad hoc loan on day 1, sir. And on day 29, what this bank manages, there are certain managers are doing this. What they do, they sanction another ad hoc. Using that ad hoc, they will close this ad hoc. So we'll not have any controls over it. And these controls, after I've witnessed a lot of AI tools, based on the dates at which every ad hoc have been sanctioned and the transactions been happening, first ad hoc and the second ad hoc, how this transactions are happening, everything been assessed, and that assessment gives us a data that said on 1st of January, the ad hoc sanction was 20 lakhs, and 29 they have again sanctioned ad hoc for 10 lakhs. Between this period, there were no transactions happen. It means they have sanctioned another ad hoc only to repay the interest requirement or some other drawing for limit requirement for the previous ad hocs and the sanctions. In that way, the reports are now sanctioned, or now it's made possible using AI tools. In that way, it is so helpful. Huge cash withdrawals in loan accounts. Loan accounts will always come with a purpose. For example, if you go and get a housing loan, It is with the purpose that it should be utilized only for the purpose of construction or purchase of a house. In the same manner, every working capital loan that I used to get from the banks, from the entrepreneur perspective, say for example, I'm going to get a working capital loan for procurement of raw material, then I should use it only for raw material. I need to give the track where this blockchain technology used to talk about. It will have the trace right from the beginning till the process where it went. So like that, we have to have the trace over the purpose of utilization of the loan. If the utilization of the loan is not made against the purpose, it is equivalent to a transaction which is considered as a violation PMLA, Anti-Money Laundering Act. So Money Laundering Act, in that it is covered. So violation of utilization purpose is also a problem. This huge withdrawal in loan accounts is an indicator. These indications are specifically to understand what this particular assessee does with this excess cash withdrawal. People used to withdraw cash and they spend for some functions or spend for some buying some personal assets or goals, and they invest in some real estates. They stayed, and for which they have utilized the working capital which is brought from the raw materials. For proving this transaction, this cash withdrawal being utilized for a purpose which is not actually asked at. This AI tools helps us tracing their PAN numbers and tracing to the social sites, or tracing to the websites like registration websites, government registration websites, and matching with their PANs or other some common details, and getting us the information that on 1st January the loan sanction is 1 crore. On 7th January they purchased a property for this much. Again, to that circulation, they are only, this is the only revenue they have got for it. Like information that is whatever is possible from deriving from the internet, that is getting it, and these are the information which helps us to identify. By the time we get we sanction the loan, or by the time we get these alerts that huge cash withdrawal is happening, banks are getting aware now, or the auditors who went for doing all these audits getting aware that so these funds have been not properly utilized. We need to alert this account, and we have to send a notice to this particular assessee to make them repay this amount. Otherwise, one fine day, after 2 or 3 years, he may end up in NPA, and this will be a huge loss for the bank. So these are all earlier alerts that we get. Then observation of delayed payment of dues. Dues in relevant to statutory dues like ESA dues, PF dues, all the government-oriented dues. If there is a standard delay in the pattern of making dues, and that also has been clearly identified. How it is identified, it is like we have this list of non-payers, list of defaulters. For example, I have not paid returns GST payments properly for the past 3 months. Then my registration will be auto-cancelled, and it is available in GST site. But this GST information available in GST may not be available for the bankers. AI tools helps them fetch proper and accurate information, and they have a lot of tools which every banks are using it. Based on that, they specifically that site goes to that particular login in GST sites to their income tax sites and gathers information and reports them stating that they have not paid GST dues properly, they have not filed their GST complaints properly, no statutory complaints is proper there. So it is an early signal. So data analytics is something which we do after the event has happened. Now this AI tools, which is like early signals, which helps us to resolve a lot of problems or avoid a lot of problems even before it happens. This is all the operational levels. And what are the other thing that is AI helps in is to identify the concealment of documents. What are the problems happening there? For example, sir, customer A pledges his property with a bank to get a loan, but the title over the property is still not properly transferred to the hands of mystery. It may under a dispute, there will be a court case pending, or his father, the property has not been properly inherited to him, or he may not be possessing the original document. All these things may be there in the back end, but still this is not made available to the bankers. In fact, for these things also, concealment of documents, for these things also, AI tools helps us, as I already said, it goes and access whatever access possibly available to these tools in the registration websites. It goes and gathers information on it, and it helps us and give a specific report for immediate decision. And another area of concealment is they say I'm going to bill a revenue, unbilled revenue. The concept of unbilled revenue. What is this concept of unbilled revenue? Only thing, if the revenue is billed, it will be reported in the financial statements. But there are certain transactions where if they want for the purpose of banking loan, they say we have received the revenue and we will bill it later. For purpose of avoiding taxes also, they do these things. There are certain provisions which says them that in GST also, if I'm providing services, then that services, if I receive advance money for the services that I provide, for example, I'm a chartered accountant providing teaching services, I've received the advance money already. Then the advance money, wherever, whatever date I've received, by that time itself, I'm supposed to make GST, no matter whether I've invoiced or not. I may invoice it even after 30 days also, in the next month. But I'm supposed to make the tax payment even before or by the time I've received the advance. These cycles and these gaps are not promptly available as a collective information for the banks. But now, since GST site is available with the information, all this information against whether they've paid taxes against advance payments or not. How it is happening? It is happening by data interchange between GST and the banks. Banks, what they say, they share the information of all the advances. If at all GST department asks for it in the inspections or the investigations, they share this information. On that basis, based on the advance money received on the bank statements issued by the bank department, GST department is arriving the liability. And the GST departments, whatever turnover they have already got from the assessee self-reporting, that is received as a turnover information from the banks. These coordinations, collective of things, all this nowadays are easily made possible with this AI tools. Then diversion of funds. Diversion of funds, one specific point I've already highlighted in relevant to delayed observation in payment of dues. Now, not the delayed observation, huge cash withdrawals in loan accounts. Another thing is, people initially ask for funding from a bank stating one particular project that I'm going to start a garmenting industry. So I'm going to invest some 30 lakhs and I'm asking bank to invest some 50 lakhs, totally 80 lakhs, for which I'm going to invest in these type of machineries and this much will be working up like that. We used to give a projections and we will make available with a loan. Then what happens? By the time the money is sanctioned, they will not utilize for the project they've asked for. Rather, they will convert their investment into some other thing, like they may invest in the market. They try to make money in the market. There are certain times, maybe business is at a recession times. Even nowadays, garmenting industry are very much of recession because of Ukraine war and US recessions also. If that is the reason, still the utilization has to be at par with whatever the sanction requirements is. If it is getting deviated, then this need to be reported. How it can be reported? So that requires a tool behind the utilization of funds and whatever we have projected during the sanction. This need to be compared. It's not just a comparison has to happen only when we ask for it. It has to compare at every transaction, every receipts and payments going through this particular loan account. Is this sort happening in connection with the provision they've given? This things has to happen in the backend and it has to report it periodically. And that is the way we can avoid this huge NPAs and bad debts on the loans. And this is all now slowly happening. And this helps in avoidance of diversion of funds. Once the moment this diversion of funds can be avoided, what we call it as shadow economy, and that also can be restricted to a very large level and we can control our inflation too. So to that extent, this tool's performances are so must. And increase in borrowings in spite of huge liquidity available in finances. And this is also done for the purpose of diverting the actual funds to invest in some other business. So I have started a public company and I've sourced funds from the public and I've shown that I have sufficient amount of liquidity in my hands. Based on that, I borrow funds from the bank. With both this liquidity, what these people will do, they will not do the business what actually they started at. They try to divert it to some other places or some other companies like subsidiary companies or to their friend companies, and they create bogus transactions. These all can be traced with this help of this AI tools, which we are actually witnessing nowadays. And in the nature of collateral securities, whether the securities values are sufficient for the loans that they've given, or whether the assessee, the valuer, the bank manager, the specific bank manager, they all are tied up, and whether they all did a fraud in a tied up manner or not, that can be verified if an AI tool can properly assess a value based on the lot of information which is available in the internet in connection with the registration time or in connection with the market valuation rules. Based on that, they get some information, and that information is projected and reported in the systems, beyond which it will be like once the information is made available in the system, either the manager or the valuer or the assessee cannot go beyond it. So that is another possibility for prevention of these frauds and errors. Then significant up and downs in the company stock. So every month, if I get a working capital loan, I need to declare my stock. So last month I made a purchase of 1 crore. I made a sales of 80 lakhs. Now I have a stock of some 30 lakhs. The next month, like that, every month I have to declare my purchases, sales, and the closing stock based on the accounting policies of valuing the stock. Once this valuation method, the value at which this purchase has to be accounted for is fed into this tool. What happens if there is a slight deviation, hardly less than 1% of deviations also, it is perfectly identifying, and it says the stock that this assessee have declared for this month is not as per the norms. So that flag triggers. The moment that flag triggers, the bank managers gets an alert. So they report it to the regional offices, and from the regional offices, what they do, they used to engage a third-party stock auditors. So this is one information which is a key in giving alerts and making the process so transparent. This is the way this AI tools are so helpful. And another thing is tracing this intergroup transaction. Like a person A and B starts 3 companies: AB Private Limited, BA Private Limited, and ABC Private Limited. 3 companies, and what they do, they try to get loan for all the 3 companies, and they try to direct sales from A Limited to B Limited, then B Limited to AB Limited. That way, they do the circular trading. The circular trading is way there will not be, essentially there will not be any movement of goods, or actually there will not be any movement of goods. Still, they did the circular trading transactions at paper levels to get their funding for all these 3 companies and make use of those funds for their personal needs. So for this also, based on the information available in IOTs, or based on the information available in the government portals, all this group company transactions need to be parallelly traced. For doing all this intergroup transaction, what these people will do, they will have A Limited's bank account and loan in one bank, like Bank of Baroda, and B Limited's operations in another bank, maybe in State Bank. So that all these 3 have different banks. They may not share the data. In that way, ASIS used to do all these intergroup transactions to get funds from the banks. And these things can be avoided, or it is happening now. To certain extents, the intergroup transactions are traced through the related party reportings, and the related party reportings are information made available to the Ministry of Corporate Affairs portal, and these information are taken up for the assessment, data analytics, and that information are provided as a report by third-party agencies to the banks. And these third-party agencies are completely depending on the AI to generate a transparent report on this. Then the regulatory concerns. Though ASI is so good in paying taxes, paying the monthly EMIs and everything, they may not be proper in paying taxes, and their financial reportings may not be proper. So they may not be got rated by the income tax authorities or GST authorities. Here, the problem is, from the bank perspective, he is a genuine client, but from the revenue department perspective, is someone who is not reporting properly. This is also violations, and these two also need to be concurrently need to be watched and concurrently need to be assessed. So for these also, if any problems an assessee creates with the tax authorities, and those informations also gathered, processed, and it is made available not just only for banks, even for labor welfare departments also, in like ESA, EPF departments also. So that tomorrow that assessee should not make any default in making payment to their own employees and laborers. Otherwise, after doing all this work, they should also suffer. So all these connecting points in reporting the required informations is done by AIS. At the last windows, I will show you how this income tax department and GST departments. Very recently, I have received some notices from the GST department. I will show you. See. I think this is clearly visible. See, this is a notice generated using an AI tool by tax authorities, by the GST tax authorities. Now, previously and all, adhering to the rules and regulations, what is there in the GST law or what is there in the previous VAT and service tax law, A particular officer used to sit and assess based on his own intelligence, and some more other data will miss out, or some other clients will miss out in the number of count. Whereas now, what it does is, see this point number 7. Turnover reported in GSTR 3B is less than GSTR 7 and 8 by 10 lakhs or 5 lakhs or more. This is one criteria which the system itself is generating, and it is searching for the information. What is the GSTR 7 and what is the GSTR 3B? GSTR 3B is something assessee reports every month. What is their turnover, what is their total purchases, and how much is tax is to be paid. What is GSTR 7 is, every supplier who supply through this online platform, e-com platform, through this Amazon, Flipkart, on every transaction, 1% TDS will be deducted, and it also will reflect in the GST side. 1% TDS, which means all the transaction happen through e-com site. For example, I've made a 10 lakhs of sales. For the 10 lakh, 1% tax deducted. GST 7 already have my information of turnover that I have made 10 lakhs of sales in this particular month. Whereas in 3B, where I voluntarily report, if I declare it as 8 lakhs, automatically it will ask for at this point number 7. Or if the difference is more than 5 lakhs, automatically by the month end, it will generate this. So this is the way, even a people who does most of the time don't be intentional, even if it is not intentional, it is too costly by the time all this AI tools is processing in the department. So what happens to it? It increases the need of assessees to be more cautious towards complaints, and it increases the quality of the financial disciplines, quality of making the people to pay taxes. And that's why every month we witness there is a huge increase in the revenue collections. Last month, if you witness the GST collections, it was somewhere around 1.67 lakh crores. By the time when GST was introduced, it was only half of it. By the time it is 2017-18, this huge increase is not happened just because the law was implemented and we people used to advise the business entrepreneurs, business forums, and make them pay all these things. It is not that the only reason. Another reason behind this is all their informations, all their errors are properly gathered. Like this, it is assessed by an AI tools. So by the time they make the mistakes, see, we are in the period of 2024, and this information are assessed for the last 5 years. It is not so. Some 2-3 years before, it was not so. Informations in relevant to 4 years before records only, they will ask in notice and they will ask for in demand. Nowadays, it is not so. If any error I've committed in the last month, that is the month of July, I will get a notice in the month of August. So that extent, it is so speed, and the data is also. See this point number 9. For 17-18, it have fetched some data where it says assessee have declared a sales voluntarily that it is 2.59 crores. But for that period, you made a purchase of 3.12 crores. Then why this difference of 53 lakhs appeared? Is it you are entering into a loss, or is it that you are selling products at a lesser cost than what you are purchasing it? Are you doing services? In all those aspects, this puts a query by himself, and it gets an information, and this information is made available to officers. Officers immediately get an alert and they start issuing notice. This is not 1 or 2 notices, it's thousands and lakhs of notices being generated like this and been issued to all the assessees. This is not possible unless otherwise a proper AI tool is in place. So I thought this is must and most important thing to be seen. And into taxation part, since I've already touched with GST, let me touch another point in GST. Recently, more than 10,000 fake registrations in GST has been identified and has been cancelled because of AI tool assessment. It starts assessing in a way such that how many of the organizations have uploaded the same EEB bills, and showing the same locations. How many of them just only monitored or modified their door numbers, like small information they have changed, but already they've been running one more concern the same premises. In that way, it starts asking queries like this. If these queries are not promptly answered, then the moment this GST registration will be cancelled. A dealer who is already into GST and suddenly his GST registration get cancelled, it will be a huge cost as business will go standstill. Reason, all his purchases he's not eligible to claim ITC, and all his sales also he cannot pass on the ITC to his customers. What happens if he's going to make a B2B sales to another recipient who is also having GST? He will not prefer a person who is not into the GST. So it will create that much impact. In addition to that, there involves a lot of penalties also. Penalties, I will show you what are the penalties. See, penalties in relevant to all the purchases I made. Before GST, it is only a manual process by which I take all my purchase invoices supported by the movement to the department and get it verified, ticked, acknowledged by the department, and then only I'm eligible to put it. Now it is not so. They have introduced the one statement called GSTR2E. All those purchases I make should be made available in GSTR2E. Even if I have invoices, if it's not in 2A statement, it is not eligible. How do I do the verification, sir? I have one SSC who is a dealer in medicine, has supposed to invoice at the minimum 40 to 45,000 invoice in a month relevant to sale of medicines. How do I verify whether all these sales, all these purchases are properly made available in GST? I'm using AI tools. AI tools, I mean, more often helping us in, first it was helping a lot in the data entry level. Now one step went ahead, started helping us in reporting level also. And like Google Bard and like things like Chat GPTs, we started getting beautifully drafted letters, minutes also. And these are all certain ways in which it helps us. And in relevant to income tax department, how an income tax department is making use of this AI. As you all aware that income tax scrutiny assessments in the past 3 years is not manual, this is faceless. It means if my case is taken up for assessment, I don't know who is the officer who is going to assess this. And without this faceless thing, how do I justify my transactions? How it's happening actually? This automated income tax scrutiny, it is happening beautifully just because of the AI tools. For initially notices generated by the officers somewhere sitting in some place, we definitely don't know who is going to do this income tax audited scrutiny and all. But after the first notice, whatever data we submit, for example, I say I have a creditors of 3 crores. Immediately, what this AI does, what is the aging of this 3 crores? All these 3 crores or creditors are relevant to his business or not? To what extent it is relevant? If it is relevant, what he does with this part? Like that, all the information is segregating it and it is giving us a beautiful report to the department officers. The next queries when they place it, we can able to sense the queries that are raised. The queries are so quality that it asks for specific information to catch hold of the fraudulent transactions. For gathering all this information, for giving this all these inputs to AAS, they're not just taking up IOTs and also from specific reports for data sourcing, like annual information system, they call it as AAS, taxpayers information system, that is called TIS. These are all huge informations which are available against a particular PAN with bank. For example, I have a PAN and I have a bank account. My bank account transactions are connected to PAN. I'm going to purchase a gold. That is also will be connected with PAN. I'm going to purchase a property. I'm going to buy a car. Everything will be connected in relevant to this AIS. This AIS is a data source, and that source is again fed into the AI tools, and that gives them a wonderful report. Plus another thing where they are implementing this AIS, grievance redressal area. Clients are so genuine that they are paying tax properly, everything is fine. But fortunately or unfortunately, some system errors that they were not able to solve it. For that, there are a lot of redressal mechanisms like CP grams, ask. This is also driven by artificial intelligence. When you put a query there, it will immediately bring in the apt answers, by which if you're not satisfied with the apt answers, it will further ask a detailed queries for it. At third sector, third levels only, it is going to connect with an officers one-on-one. To that extent, it's fine-tuning itself in answering all the queries to the assessees also. See, very recently, when I think in April 2023, I think, in CIT, Commissioner of Income Tax Chennai have given the statement that no more human intelligence is required to find the deviations, but because we have started introducing AI tools into our reporting systems, and this is helping us a lot to find the deviations. So this is another important area where I thought AIs are playing a vital role. And one more area is, you all very well aware that nowadays invoices is, one second, I will open an invoice. So sorry that I have not opened the invoice. Fine. Electronic invoices we call, what is this concept of electronic invoice? Anybody who is making a turnover of more than 5 crores in India and who's holding GST registration need to generate only an electronic invoice generated from a portal, that is from the government portal, which before 5 years and all, we never dreamed that invoices will be raised from the government sales. Whoever sells the property or sells the materials, they will used to issue the invoices. But nowadays, they have make their own portal called invoice registration portal, which is connected with the central registry, and it ensures that nobody can issue duplicate invoices. And these electronic invoices are promptly traced to measure what is the value, what is the quantum of transactions, buy and sale transactions, service provision, recipient transactions happening in one single day, one single hour in the country. That can be traced with the help of this e-invoicing. E-invoicing is another, uh, I would say, it's a great development with the channel to AI. So these are all certain impacts which we are witnessing, and maybe in near future we will witness furthermore developments in relevant to it. We are looking forward for it. We are looking forward for uh, reports which will help us in identifying the deviations and to ensure the transparency in our reports. And that is only possible with the help of all these AI tools. I think I have done whatever I've experienced. Arjun sir, if you have any query to it, we can take up, sir. Otherwise, you can take up to the technical sessions. I hope it will be useful for you also. Because so far what I've seen from the past sessions, it is all so technical, but this is purely our experiences in relevant to doing bank audits and income tax notice addressing and things. Fine, sir.
Yes, sir. So participants can just put their queries in the chat box if any. Sir would answer them. Unmute, sir. Arjun, sir, we are unable to hear you.
Microphone is, yeah. So Kalpana, no queries. Actually, first, still participants feel free to raise any queries you might have. As Vishnu sir, professional chartered accountant, so he has underlined the finance sector. Actually, finance sector is too big, and sir, with short notice, sir has tried to underline impact of our artificial intelligence tools, how financial sector is getting impacted heavily, as finance is a blood of all businesses and very important topic for all of us, everyone. Though as a technocrat, we need to write some programs to for some different problems. But first of all, being a technocrat, people may not be aware the problems, what the problems, and finance is a blood. So beautifully, excellent information Vishnu sir has brought in front of us. So I am very much thankful to sir. Over to Sai.
Yes, sir. So thank you so much, sir, for sharing all the insights with us today. It has definitely given us a new perspective about finance, and I think participants would be really eager to apply those finance and mix it with the tech that they have been learning throughout the workshop. So, sir, once again, I would like to extend a grateful thank you on behalf of IIT Pune chapter, Buzz Engineering Academy, and Civic Incubation Center. We are really grateful. Thank you so much for sharing your insights, knowledge, and time with us.
Yeah. Thank you,
Thank
sir,
you.
so much again, Vishnu sir.
Thanks a lot, Arjun sir. It's only because of you I've been all the way. You've carried me from Tamil Nadu to the online session. Thanks a lot, sir. Thank you.
Thank you, sir.
Thank you.
Okay. As Vishnu sir, the chartered accountant, practicing, and he brought this very important aspects in front of the technocrats to. First of all, we have to understand what the example. Yeah, Dr. Nitin, the quiz will be sent by today for all the tools, and that will be closed. Yeah. So let us move further. As sir has given a beautiful treat in front of us. So let us share my screen first of all. Then before going to, yeah. So I think my screen might be visible. Yeah. You see here is again the Python environment, and sir has underlined so many areas. It may not be possible for us to cover all the areas, but few of the areas or some example we'll try to cover so that we'll understand how artificial intelligence is heavily deployed in finance sector. So suppose here on my screen, if it is visible properly, I will try to make it little bigger also. Yeah. So the first thing is algo trading and quantitative analysis. Uh, Algo trading means, as you might be aware of that, you might have heard daily news that so and so people, they have invested so much in share market or from finance sector, and suddenly you will find that the share market got down, and you will find the notice news that so and so company or so and so individual lost so and so lakhs of crores of rupees. So there is a power in finance sector, especially in the trading sector, that within a 1 hour or 1 day, someone might be the crorepati, and within 1 second or 1 minute, someone might be a crorepati. Kind of thing is happening in the finance sector. So we cannot predict what could be the future value of the share market or share. That's what the idea as one of the area in the finance sector. So here, instead of having some production, here is one algorithm which is described in many language, but here is for us in the Python language. So our topic is algo trading and quantitative analysis. This is what the we are trying to see some of the examples in the finance sector, as Vishnu sir has underlined. So one of the example where the algo trading means this algorithm will tell us based on the past data and with the help of artificial intelligence, this algorithm will tell us whether we should hold our share or we should sell out our sell, or what could be the probable futuristic value of our share. So for that purpose, I hope you understand what the problem we are trying to address. So here you can see, as usual, in Python, first of all, we have to import the library, and that library is basically the one of the library required is Python pandas libraries. If you look for line number 3 over here, the Python pandas library, we need to get it downloaded for our this Python environment, especially again the replit. If you have a replit, I will shortly share the algorithm also, and we'll try to cover that algorithm right now. So one is a pandas, and another package for required for our program. That's what the NumPy as a NP, and also to get it the visualization of the data as just like MATLAB and all other libraries, the platforms. So in the Python, we can have a import of the matplot we can have a matplot library dot pyplot as a PLT. That's what the libraries we need to get it downloaded or get it imported in our Python environment, so that we'll be able to understand what the algo trading in the finance sector. I hope you understand in our algorithm, first step is to get it libraries, and just here the libraries are the pandas, NumPys, and the MATLAB. I hope it might be clear to you. Now moving to the price data. So for example, share some XYZ company or L&T company or some XYZ companies, the price. So that price, you might be aware, the random price, it's changing. So within minutes, it might be increase or it might be decrease. So here we need a function that's a random seed value and the function. So this algorithm will tell us whether you have to hold this or you have to sell out, or how many days you should hold. So automatically this AI algorithm will help us to suggest. That's what the idea. So that seed value randomly we have chosen as a suppose 42, so because we have taken some the one random example. and this particular price value, how many number of days we are going to hold, or suppose we are having XYZ share with us, and when you are going to sell out it. So instead of having some predictions value from the based on some knowledge from the persons, we should have some technical value or some technical suggestion from the AI algorithm. So how many number of days we are going to hold it, and the price calculated as line number 10, you can see the price calculated, the random, and we need a function, the random, and the price value is the integer value. So we need a function random integer, and how many days you are going to hold it for example, minimum number of days you can hold for 50, or suppose maximum number of days you can have suppose 150 days. That's what the some random value you can have over here. And then you can have a numpy, the random, the function required over is a random and number of days. That's the parenthesis, or we can have a bracket. That's what the random bracket, and number of days are defined over here. So I hope you understand the library declaration and the probable price and the probable number of days we should be able to hold this particular share, and we should be able to understand the values. That's what the algorithm is going to talk about it. Now, the third step in our algorithm is creation of the frames in the pandas. So here we have created the data as a frame, and the data frame is a price data, and in that price data, the what actually algorithm is going to do is daily the values for suppose every minute or every hour or every day, what could be the value, and that value just I think you might be aware what the statistical analysis, that the mean value will be calculated. Mean value will be calculated. That's what the statistical parameter is being calculated with the help of this price. That's what the rolling window, and here the mean value is being calculated. Now this is what the third step. And moving to our algorithm, the moving average value. Now this moving average value with the window of suppose 50 days, then the price, what could be the price for the next 50 days or for the next 10. That price is every minute or every second continuously, that price will be updated. That's with the help of the short average value, and that's what the ruling window given here is a price. This is a data frame, and the window given is a 50. And that's what whether you are going for the short term or whether you are going to hold for the long term. Suppose you are going to hold for 10 days or 15 days or 1 month, or suppose we are going to hold for suppose we can hold for suppose next 1 year or next 6. Actually next one is to begin this share market, but suppose we may hold it for suppose next 6 months or so. So that you can call as a long term moving average value. It will be calculated by the algorithm. And then the next step, the fourth step, is the position, and the signal values will be calculated. And the position is again the Boolean position. Boolean position means suppose average value, suppose 10, we can call it as a reserve value. So that value will be either above or either low. So either high or low, that's what the Boolean value, and that is defined as a 0. So if it is a 0, this value, so you can hold it. If this value is a 0, Boolean value is 0, then you can hold it. If this value, position value, suppose -1, then you can sell out. Or if this value is a 1, you can buy that particular more shares. You can buy. That's what the meaning is here. So that data, the local data, that's the short and the long. So you see the local data, that's what the short moving average and long moving average. So the moving average value of the values for the short time and for the long time. So here it will be compared whether it is a less than or whether it is a greater than. So this, whether it is a less than or greater than, then this value is can come 1. If it is a 1, then you can buy, because the short moving average value is continuously increasing. And suppose the local, with the help of local data or the real-time data value, if short moving average value, which is a less than the long moving average value, then you can sell it out. So that's what the decision given by this algorithm for us. Now moving to the fifth step. So suppose we are holding something, and how much the we can gain, that's called as the daily returns, how much we'll get. That return generally it's positive or negative, but generally it's positive returns. So if you are getting the returns, that return value you can calculate with the help of the price, and the function required is a packet change, and the position. With the help of that, you can calculate the daily returns value also. Now moving to the cumulative returns. Now I think the cumulative value, the most of the people might be aware what the cumulation is. Cumulation means just like today is at 10, and day after tomorrow is if your return is at 20, and then one more day after tomorrow is suppose 30. Then that value is continuously getting added. That's what the cumulative returns we may get. Now algorithm is completed over here. Now this should be visualized. For that purpose, as we have used the matplot function above or. So the plotting. So for that plotting purpose, you can plot the values with the figure, and the PLT plot. You can have a cumulative returns and the name. That's what the strategy which we are going to apply. That is being defined over here, and we can plot the that value. In case of whether you will be able to buy that new, or whether you are going to hold it. And then this 32 and all, that will be the function used here is a legend, and the title is given algo trading strategy. So what is our strategy, whether you are going to buy or whether we are going to hold. And the label we are going to give here is a delay, and plotting the cumulative returns, how much will go, and that the value will be presented. I hope you understand. This is what the one of the algorithm which will help us to make us understand whether the we should be able to hold it for our share for some time, whether we will be able to buy some share or whether you are going to you will be guided. The people like suppose our CSR right now here underlined. So we have to get the help from these people. So these people will guide us for us on. Now the same algorithm, suppose I hope you understand. If you are having with this the replit, you can get it open the replit, and this the algorithm I will give you here. Only you can change the values over here, and you can get it executed, so that you'll understand whether we'll be able to take the financial decision. Now once this is there, then you'll find here there is a one button over here. We have to execute this our algorithm. Now we will see this if you run button, just as it is taking little time. So just already I have executed this. So just I will try to explain you. And yeah, so this is what the algorithm we got, the execution we got over here. Yeah. So this is what the figure, and this is what the algorithm we got. Now you can see the label given as usual, the matplot. That's what the idea. The label given here is a algo trading versus buy or hold, and which strategy we are going to apply. And here you can see cumulative returns, how much returns you are getting. Cumulative returns means daily it will be added or subtracted depending upon the real-time values. So suppose the average value we have defined is a suppose 1. That's what the strategy. That's what the strategy over here. And this the saffron, this color, you can see whether if you get the this values above this line, then you can take a decision of selling. Or if still if you are this value is lesser than that, then you can take a decision of holding for some time, because if you sell it, then you will be in loss. So either you can sell it here, or whenever it is above the this return, so we'll get the more returns over here if you sell it here. So here you'll get the maximum returns. Or suppose this is for 50 days, 0, 10, 20, 30, 40, 50 days. So for this 50 days, you can observe, and you can take the whether the buy decision or hold decision. Now this is the is being included as sir has underlined many things, but this is what the tools, financial tools. The artificial intelligence is heavily machine learning and artificial intelligence is heavily used in the finance sector, especially some international players in the finance sectors. They are using AI and these tools heavily for the finance sectors. So many Indian players are also nowadays using. Some individual persons are also started using. So this is again one of the promising era which you need to underline here. So suppose, for example, in here, suppose the days you have defined over here is suppose 50 days. You can see it here. Suppose this, for example, will little change. Suppose, for example, how much it is, will make it suppose 100, and this is number of days, and suppose the window period is given suppose 20. So here I will get suppose 10, and suppose this I will give it suppose 3 the end window period. Just we'll run it again, and we'll try to see this algorithm. Meantime, those who are interested to execute this algorithm, I will give you this as a copy. Okay, and I will just put it for you. Yeah, so it is executed. Yeah, it will get little time, but now you can see the algorithm over here. Now you can see the number of days as we have changed, and the here cumulative values again the changing, and the strategy you can see after 30 days the strategy is this value is again going to decrease more value. So there is no option that we have to take on the decision about this with the less than the 30 days. So I hope it might be clear to you, and meantime I will give the this is a text file I will give you for this algorithm. Okay, I will give the text file. Yeah. So this is the text file I will give. Those who are interested, they can open their this one Replit, and you can have a algo trading algorithm. Algo trading, whether we can buy or sell. Buy or sell. So this is what the decision you can get. This is a buy or sell. So with this algorithm, we will be able to get a decision whether we should buy or sell based on the current values over here. So just I will put it here, this algorithm. So those who are interested, yeah, they can, yeah. Just I will put it for you. Save algorithm, and just I will put it on the group over here. I think AI&ML here, the document, yeah, 1 minute, and the desktop and algo trading, buy or sell. So I expect everyone to get it executed this algorithm. Yeah, this is what the algo trading algorithm. I will be happy if you reply in the chat box. Yeah, anyone is trying to do this? Yes, anyone is trying to execute, otherwise we'll proceed. Please respond in the chat box if anyone is trying to execute the algo trading algorithm, AI based algo trading algorithm, which is for the finance sector. If anyone is tried, if anyone is interested to try right now, you can open your the Replit, and with Replit you can just paste this algorithm, and then you can have a understanding about the algorithm, how this algorithm is useful in the finance sector. Yes, anyone else? Okay. Yeah, Jayshree, you got it. This execution of this algorithm with replete. Yes, Jayshree. Yeah. Okay. At least one got. It's okay. I hope you understand what the algorithm is. Now we'll move to the next algorithm. We'll try to see one or two algorithms. Now, for example, we'll move to further. Yeah. Yeah. Now here is one more algorithm. Now we'll go for, as sir has underlined many things. Yeah, just executed. Very good. Now we'll go for the one more algorithm if it is working. Yeah. So again, same. And now you might be aware of that you will find daily that so and so businessman has taken so and so money, or they left, or something will happen in the finance sector. You will find that so and so bank got completely collapsed or bankrupt, something, because you might be aware of that many people, though the government authorities or some intellectuals, they are daily coming with some solutions of the frauds. But the fraudulent people, they will be very sharp. They are coming with different kinds of frauds. So basically, here the AI based algorithm, which will help us to detect the fraud and prevent the fraud. So detect the fraud and prevent the fraud. Fraud in the sense, generally, here our topic is financial frauds. So how these algorithms are helpful for us to detect and prevent. Actually, generally the government authorities, whatever the policy makers, they are trying to avoid the frauds. So they are having different mechanisms in place, but still there are some loopholes, and by taking the advantage of those loopholes, these fraudulent people will do frauds. And you might be aware, the if this fraud happen with someone, either individual or some banks or some organization, then I think it's highly pathetic and painful for anyone those who got cheated by this kind of frauds. So now the in finance sector, they, as sir has underlined, those artificial intelligence algorithms are heavily started using in the finance sector, because finance is the blood of any business, as sir has underlined. So in this finance sector, the fraud can be detected as well as prevented. That's what the our second topic for our discussion right now. So for that, again, you can see it here, as usual. The replit is environment, the Python. I think so many other things are also there, but this is heavily it is used in the industry. So we have taken this example over here. So as usual, for this particular application, this algorithm, which is a part of the our system, atomized system or atomized algorithm. So whatever banking transaction or daily what the servers, so it is connected or accessed with the server data. So first of all, as usual, you have to import the library, and that library we can import as a pandas, as a PDs library. And then you can have some model selection for this algorithm. So different model will be there. So for the frauds, the experts, or we can call it as a policymakers, they will I think in machine learning, we already studied that the training phase and the testing phase, training phase and testing phase. So suppose for XYZ of fraud, so in order to avoid that, the policymakers will try to train the system. So that's what the function used here is. We can import the library here, this sklearn model selection library, and from that library you can get it downloaded, train, test, split function. So function used is for train test function, means the training and testing function. And then from the sklearn library, sklearn learn dot tree, just like in our math dot or you can call it as stdio dot, like that. Some libraries are there. So this is one of the package for the part of the pandas sklearn model selection from the panda. So you can have a sklearn tree, and from that tree you can have a one of the machine learning, that's the function, that's what the decision tree classifier. I think in the last class we have seen the k classifier or some regression, or trees also the one classifier, but we have not covered that but just we have covered one. So this is a tree classifier, the algorithm, machine learning algorithm, the function we can use. And from that you can have a function, again a sklearn library, that's the matrix, and from that the score is being calculated. So you can import the accuracy score, and then you can have a classification of the report. That's what the function or basic libraries we need to get it imported from the pandas environment. Now moving to the simulated data test over here, simulated data test. So here the whatever finance the frauds we are going to detect. So the here some dummy values we have taken. So the some we can call it as a dictionary is getting created for that particular values. So in this case, the dictionary, what the dictionary data we are going to create in, as in the those who are fully aware of the Python, they can understand what the dictionary function in the Python. So here dictionary is being created, that dictionary here, and in that some amount is being represented. Might be suppose 100, 200, because it is just an example we are trying to see. In the practical level, it might be in some millions and crores and thousands and rupees, but as of now we have taken some the amount values, the how much the what the algorithm we are going to use for the value for that is how much. And then we can the fraudulent there are two aspects. One is a prevention and one is a detection. So the fraudulent value, again we can have the whether the value is detected or not detected. Again, it's a Boolean answer. I think you can understand what the Boolean is, either zero value or either one value. I hope you understand how the dictionary is getting created over. And then with that dictionary, we have created the frame function. That's what again Panda libraries. One function is there. That function is a data frame function. And with the data frame function, what the library we have defined over here, that the data frame function. Now moving, yeah. Yeah, I think Pratik, last class I have already given recorded link over here. Again, we will share it. You try to focus on this right now, Pratik. All recording this, no every class. All classes are there. All classes are there. You have to go to the live and all things are there. Okay? You have not checked it. You check it, all are there. It is a live on YouTube live, all recordings there. You can get it from that. Okay, Pratik? Yeah. So right now we are trying to see the algorithm for the AI algorithm. Okay, you put it. We'll try to cover it. Yeah, yeah. So here next function is a split data into features and labels. So we can have the X function and the Y function. So yeah, I think Pratik want to say something. Okay, you are certified, then will you take here then? No issue. Okay. Split data into features. Mr. Pratik, You have certified, but what we can do is, it's great thing. We'll appreciate your certification. What help you need from us then? You are certified, it's okay, good thing. Uh, okay. Now we'll see the Krishna.
Yes, sir.
Actually, Mr. Pratik is putting so many messages. I don't understand what we have to do him. Mr. Pratik, you can put it your queries here, but don't disturb the class. Actually, we are getting disturbed. If you are certified with some good companies, we appreciate. I do not understand what's your query is. And during the class, we'll take at the end of the your queries. Because others, you are certified, but many others are not certified, so they will be getting disturbed. If you are certified, it's a great thing. So we'll apologize. We appreciate for you your certification you got from IIT Madras Data Science ML. But our session is going on, so we have to focus on the session as of now. Recordings are also available over there as a link over there. Okay. Yeah. The frame we have taken is a split data trading and testing set we have taken. And then next algorithm, the decision tree classifier. So for this decision tree classifier, you can then take a model, and the function uses a fit X train and Y train. And then you can have a make predictions on the test data. As I told you, the artificial intelligence and machine learning, there will be some training phase and there will be some testing phase. So that model will be used here over the training and testing over here, and make predictions on the yeah yeah make predictions on the test data, and then you have to evaluate the model. And in the model, the accuracy is defined and the report is defined, and print the model accuracy and the classification report. That's what the algorithm or code. Just I will try to give it here to you. Meantime, it will get it executed. So this is algorithm. I will try to give you for you. Yeah. So just I will put it here, the algorithm. So our is a fraud detection. Fraud detection. Fraud detection and prevention. So this is a algorithm. I will give you for, so you can get it verified. Another algorithm is part of it. Yeah. So I will put it in the again group 4 here, the algorithm, fraud detection and prevention. Yeah. So this is what the algorithm. So those who are having this, yeah. So those who are having this replit got open. So I have given the algorithm. So this is one of the algorithm for the fraud detection and prevention. It is getting installed the different libraries over here right now, and so in the environment, the replit will help us to get it downloaded the libraries automatically. And the algorithm we have studied right now is the fraud detection and the fraud prevention algorithm. So I think here you can see that the output we got over here is you can see the Boolean values. So here is a report. The model accuracy is 1 over here we got, and classification report you can see the micro average and the weighted average, and report is precision and recall, and the score we got it is 1, and the support we got it is a 2. So based on the score, so if score is either greater than 1, recall score, or this F score is either greater than 1 or either greater than less than 1 or greater than 1, and based on that the we'll be able to find that the fraud probable potential fraud will be there or not. So that's what the fraud detection and for the fault fraud detection and prevention algorithm. Those who have done, please respond in the chat box. Those who are having open this library, replete. Yeah, those who are having this replete, they can execute the. I have given this with the WhatsApp group. The text file is there. You can just get it, copy that text file over there. Yeah, get it, copy that text file over here. So if you are doing, you can put it in the chat box. Say yes. If you are not doing, we'll wait for some time. If you want to say something, you can say it in the chat box regarding this algorithm. Yes, anyone is trying for that? Kalpana, you are trying? Actually, real time this execution, some getting the libraries installed, it may take little time to get it installed. Yes, anyone is doing? Jayshree, anyone is trying to get it execute? Please put it. Yeah, Kalpana, you got it execution for this. Kalpana. Yeah. Okay. Okay. Then I'll give 2-3 minutes of time again. You can try. Jayshree is trying. So our today's one of the interesting area. We are trying to see our artificial intelligence, how it is beneficial for the finance sector. So I think especially engineering graduates, generally they will go for generally MBAs, and the finance is very much big areas where they can go. Okay. Now we'll go for the one more algorithm. Yeah. Yeah. Now we'll go for the one more algorithm. So moving to the next again. Yeah. Yeah. So we'll go for the next now. So you see our topic is the AI, how it is used in the finance sector, and we have seen a number of topics are there over here, our issues are there, but we'll try to address some samples so that people can understand how the artificial intelligence algorithms are useful for the finance sector. So here you can see in finance sector, the in the finance sector, new AI use cases and algorithms uncovered in a matter of days rather than years. That's what the this journal is saying. New AI use cases, and algorithms, okay, uncovered in a matter of days rather than years. Now, if you look for the second sentence here, Second sentence, you can see what happening in the currently. The AI power digital age, you can see potential value of AI in banking and finance sector. So this is one of the topic over here. And if you look for the AI, so many benefits are there, and a few disadvantages also there, but so many benefits are there. So if the finance sector is heavily using this AI, so one of the example we have seen, suppose the algorithm trading is one of the example we have seen, and second example we have seen just right now is the fraud detection and prevention. So if you go for this AI algorithms for this finance sector, then the benefits you can see over here, the overall revenue overall revenue growth of the company is increasing. Overall revenue growth. Suppose XYZ Bank, and if they heavily use this AI, then suppose without AI that growth is suppose 50%, then with AI that growth might be more than 50%, it might be 70% or 80%, kind of that thing. So the idea behind here is the revenue growth is increasing in this particular sector. Now moving to the competitive advantages. Now you might be aware of that there is a huge competition in the any sector, but especially for the finance sector. For example, you will find a lot of changes happening in the banking sector. If you look for our Indian government's history, also some nationalization of the banks, or today some digital transactions, and some merger of few banks, or some government is putting some money in the public system, especially for the industry sector or any sector, many sectors, governments is coming up with some different schemes. So that you can call it as a competitive advantage. So based on the schemes or benefits that government is changing, support tax rate is changing, then if you go for the AI, otherwise manual changing the government rules and all the schemes, it may take a lot of time. But if it is atomized, as earlier sir has underlined heavily that how it is beneficial, so you can get the competitive advantage. Means suppose XYZ Bank is using this, and some LM and some bank they are not using, then those who are using, naturally they will get some benefits for that. Now moving to the customer expectations. Now, for example, if you look for our those are having some EMIs, or they come across the EMIs, some government may change some tax rates, no? Then EMI value immediately it will be reflected the tax rate, no? So the finance organizations they should extend that benefit immediately to the customer. If the value of the tax rate increases, that automatically it will be increases, or if it is a decreases also, that should be automatically decreases. That's what the customer is expecting. So as a government policy or policies are changing, then the customer should expect that change should happen immediately. Otherwise, that's what the expectation from the customers. And if you use this AI algorithms, then in the finance sector, then operational efficiency is also increasing heavily. For example, in earlier days, no, if you want to get it withdraw the money now also, but it will take a lot of time. We have to be huge, big lines in the bank counters, no. So it may take half an hour of time or so, or some cases 1 day also, 1 week also, in earlier, not now, but today generally less than 10 minutes waiting might be there. So that's what the operation efficiency, because of the different AI algorithms. Suppose for example they want to check the validity of the signature, or the validity of the account person, the authentication. So in the persons those who are sitting in the bank sector, they immediately with the algorithm they can check your signatures or the authenticity also. So that's what the efficiency is also increasing. Now moving to the risk management and the security. So if you go for these algorithms, then person will be able to, a person or the organization in the finance sector, I think the business means risk. So risk taking, those who are taking more risk, they may get more profit. More loss might be there, but the risk is without risk, the businesses cannot flourish. And in order to find the risk management or calculation of the risk, again, you have to go for the algorithms for that. And then the security is again one of the important issue for the security. And with the rise of digital and IoT, Internet of Things, of course, we are not covered as of now with this particular session. The points of contacts with the issued will become even more numerous. So that's what the banking is. Some, as we have seen, some advantages and disadvantages for that. Now, one more thing we will try to see here. The banks are also looking to apply AI algorithms to back testing in order to assess the overcharging risk model. So AI is heavily used. For example, here lenders, if you say, some of the magazines talk about the lenders have long relied on credit score data to make both private and corporate lending decisions. AI-powered credit scoring tools are designed to speed up lending decisions while limiting incremental risk. And if you go for the AI, you can see, of course, the advantages and disadvantages are there. But you can see of using AI in credit scoring models, the AI models, then you can see you'll have some potential advantages over here. So the AI models, AI allows large quantities of data to be analyzed very quickly, and potential the cost reduction of assessing credit risk, increasing the number of individuals with measurable credit worthiness potential, and this what the advantage. And if you look for some disadvantages are also there. So AI, artificial intelligence, can find more complex connections more from the data compared to a human analysis, and those new patterns can sometimes be complicated to understand, lack of availability or unreliability of the third-party data. I think third-party data, that word commonly we are using. So this is just I want to give just highlight what is happening. Now, before going to proceed, as time is running, so one more algorithm we'll try to cover if it is possible. If it is working with me, as I think one of the algorithm, algorithm we have seen, that's what the fraud detection and prevention. The another algorithm which we have seen is the algo trading, and one more algorithm we'll try to cover before closing today. So that algorithm is a advisor. So that's what the AI algorithm, advisor. Now, advisor means basically, you see, suppose we are having 100 rupees parked in our bank, for example. So if you parked in this 100 rupees with us as it is, then we may not get the more benefits as the little bit interest we may get. But again, the inflation may increase. Inflation may increase. So suppose, for example, we are having X amount, and we don't. You see, everyone doesn't have a financial knowledge. So we have to approach some financial experts, especially for the chartered accountants and financial advisory firms. We have to approach them, and you have to get it decision about our financial future or financial needs. Suppose we are having some X amount of, then where to invest and where to not invest, and how much to be invested and how much may not be invested, and how much should be kept for the spare. So that's what the financial decisions always we need to go. Just like patients for health reasons, we have to visit the doctors. Similarly, the financial health, always there is a need to visit the financial advisors, especially the chartered accountants. It's one of the benchmark in our financial segment. Always we need to get it visit. So now the financial experts, just like medical experts, there will be some financial experts. We have to take the decision. So it is always may not be feasible for everyone to get it in touch with the financial experts because our country, we are having huge population, and I think the limitations of the reach of the financial experts with the all population. Reason might be many, as we are not talking about the reasons. But here, one algorithm we are trying to talk about the robo advisor. means financial advisor. So we can get the this information or the decision or the suggestion or the consultancy from the advisor. So that's what the third algorithm we are trying to cover today. And here you can see our topic is a robo advisor. And in robo advisor, as usual, the class we have chosen as a robo advisor, and those are having a Python. So here you can define the initialization function you have to define, and initialization function is defined in our Python. That's the underscore initialization underscore and the self. That's what the function we are using in the here. And moving to the user risk tolerance and user investment amount. So here, how much is amount we are having for investment? Suppose we are having an amount of 1,000 rupees. So if you invest at some wrong place, then we may lose amount, or if you invest at some good place, then we may get some benefit from that. So that's what the financial, I think finance is a blood of every business, or the financial security everyone need, including all of us. So here, the how much is the risk tolerance? Risk tolerance means suppose we are having 1,000 rupees, and if you invest entire 1,000, then we may lose everything. Suppose in case of risk, but if you get profit, then we may get profit. But in case of profit, there is no issue. But in case of risk, so instead investment of 1,000, we can go for decision of suppose 600 rupees, and 400 rupees will be for the emergency. That's what it is called as how much risk we are going to take for the financial decision. Or it might be suppose we are having 1,000 rupees and we have invested this entire amount in some X company. Then if that some X company something happened, then we may lose our entire amount. So if you visit the financial experts, especially chartered accountants, then they will guide us properly. Okay, sir or ma'am, you have to invest out of 1,000, 100 rupees you can invest in XYZ, or 200 rupees you can invest at XYZ, LM and Y. So that kind of correct decisions we may get, and we may save our financial security, or we can ensure our financial security for that. So then here you can define next one is a tolerance. So here you have to enter your tolerance risk. So the financial advisor will ask us what is your risk tolerance risk. Suppose out of 1,000, suppose 50% you can take a risk. That is called as a 50%. Or here you can have some value. That's what the low value, or medium value, or high value. So here you can see line number 9 here. Your risk will be low, risk will be medium, or risk will be high, and that you can define with the help of the lower function. So lower function is required over here, and with that the risk can be defined. So user has to communicate this risk to the this AI expert over here, which we are trying to design over here. And then you have to take the investment amount. Suppose, as I told you, the investment amount we are having, suppose 1,000 rupees, or we are having 100 rupees, or we are having 1 lakh rupees of the amount, investment amount. So that we can use the self user function, that function. So here you can enter the investment amount. It might be in dollars or rupees, for example, suppose in dollars. And then here in Python we are having a different I think we can call it as a different loops. We are having a knowledge of different loops: the while loop, if while, else loop, if else, if this thing is happened, then else, or else if. So else if the loop we are using here, else if loop. So here you can have your tolerance value is suppose for example low. Then the suggestion from the expert is you can invest for example 20% in the stock market, then 70% in the bonds, and you can invest 10% in the cash or the banks. So if risk is low, then suppose decision, the financial expert decision, chartered accountant decision, or the finance managers or the financial experts decision is we got it, suppose for example here 20, 70 or the cash. That we are trying to define here in the Python. Now, suppose, for example, your the risk here, you can see the in this line number 15. For example, your risk is suppose a medium. So medium risk. Then naturally, some the portfolio defined by the financial experts, it might be little different. So suppose the risk tolerance is, for example, medium risk tolerance. In our artificial intelligence, the risk tolerance that we can define to the expert, AI expert, that the then you can your stock market you can go for 50%, bonds you can go for 40%, and cash you can go for 10%. So that's what the suggestion we got from the financial expert. Now here for understanding for this particular algorithm, just we have taken only the three options for systematic investment plan. Three options we have taken. One is for the stock market, one is for the bonds, and one is for the cash. But the real-time environment, it might be many factors will be there. It might be more than 3 or more than 10 also. So that's depending upon the suggestion of the financial expert over here. Now moving to the suppose, for example, your risk is a high risk for the expert, the will suggestion. Then your allocation, fund allocation, you can see line number 18. The fund allocation will be stock market 70%, the bonds 20%, and the cash you can have a 10%. That's what the suggestion we got from the financial experts. And then if for example your risk is neither low, neither medium, or neither high, so you may say something else other than that, then our algorithm will return with the risk tolerance, that is called as a invalid risk tolerance. I hope you understand what exactly we are trying to do in this particular algorithm. Now moving to the same thing, that the portfolio, I think financial experts will define the portfolio. So in the portfolio, you are having the assets, and in portfolio percentage allocation. So function required is a atom function for the percentage allocation, and the amount you can see the user. So how much amount you are going to invest, and that divided by percentage. So percentage you can calculate investment amount. Basically, it's a formula, the financial formula, calculate the percent. Though practically in the real time sense, the formulas may get changed to calculate the percent, or the financial advisor may define with some different finance formula based on the real time situations. And that's what the portfolio asset is being created with the line number 27. The portfolio asset is being created. Now with this, then you can have a here the expert, that is a financial expert, and here we have taken as a financial expert as a robo advisor. So for robo advisor, that's what the function which is again the part of our Python library, and get the user from the YouTube input. So we have to give the input. So we can write advisor and get user input function, and then based on that the suggest portfolio allocation. So if you robo advisor will interact with us, how much is the risk taking capacity and how much is your investment decision. So based on that information, the robo advisor will reply us the information. So here the advisor will suggest. So advisor suggest underscore portfolio function, and the printed suggest the portfolio allocation, and the asset in portfolio allocation, and the function amount, and it will be printed. The asset will be printed and amount will be printed. So that's what the algorithm. So this algorithm is useful. Basically, it's a AI algorithm, and this is for the robo advisor. So for that robo advisor, just we will put it here, the run button over here, and if you put it run button, then you can see here the enter your risk tolerance. Enter your risk tolerance, as risk tolerance is defined as a medium, high, or low. Suppose our risk tolerance is low, and then they'll say enter the amount. Suppose our amount is $1,000, for example, and then you see the portfolio is being suggested. So if your risk, you want to take a low risk, then and your investment amount is suppose $1,000, then as per the financial advisor, you can invest $200 in the stocks, and you can invest the $700 in the bonds, and you can invest $100 in the cash. So that's what the portfolio we got. Suppose let us we'll take one more example. The same thing. Suppose here is again run button, and again here you can see the enter your risk tolerance, whether it is a low, medium. Suppose we'll have a high. So your risk taking capability is a high, and amount, suppose for example we are having a instead 1,000, suppose $10,000, and then you see the amount is defined the $10,000, and we are able to take a risk. So our financial advisor or financial expert will suggest the decision. The stock market you can have for $7,000, or bonds you can have a $2,000, or the cash deposit in the bank for emergency, it is for the $1,000. That's what the portfolio is defined. I think this is what the third algorithm we have studied right now. Again, as usual, I will put it this algorithm to you. The name of this the example here is a robo advisor. So this I will put it here, the robo advisor. I will copy it here, and then again I will put it here, the robo advisor. So text and robo advisor. Yeah, robo advisor. Just I will put it here. Save. Yeah. Save. Then I will try to give it here. Suppose yeah, we are here. So I will try to put it in the chart as usual, the chart box, and document, and we'll get the robo advisor. So this is a robo advisor. Yeah, this is what the robo advisor is given. So I will give little time. I will be happy if anyone is trying to do it. So just get it copied this algorithm from the chat box, and you can have your replete environment. I'll give little time, and you try to execute it. So if you are doing so, you can use the chat box, and you can say yes if you are trying. If you are not trying, then we'll proceed. So still, if you have any queries, then you can put it in the chat box. So at today's session, we try to cover how artificial intelligence is used in the finance sector, and we have seen this different issues like fraud detection, the algo trading, insure market trading, and the fraud detection. And here one of the example in finance sector is a financial advisor. That financial advisor, we have taken help from the one of the AI algorithm we have taken as a this robo advisor. Yes, anyone is trying, please say yes. If anyone has tried, please say yes. Otherwise, we'll try to close now. Yes, anyone? Yeah. Anyone is trying? Jayshree, Kalpana, anyone is trying now? Yes. Okay. I have given this in the chat box. You can get it executed. I shall do later, Jayshree. Okay, no problem. We can do it later. This algorithm. Okay. Now, yeah, just we'll try to close. Yeah. So we have seen different advantages, different disadvantages, and just we have seen the example, the portfolio management. So this robo advisor is a portfolio management. in portfolio management, machine learning algorithms are being applied to spot new signals on price movements and to make more effective and rapid trading decisions. Now you can see the how the these algorithms are heavily used. So if you look for the algo trading, so percentage of total trading, you see these algorithms are heavily used. You see for equities, 70% of the trading is based on this algorithm. If you look for the future forecasting, so for future forecasting, the around 50% of the total trading happening for the this algorithm. And if you look for the options, around 40%, this is a percent algo trading is given over here. And then foreign exchange and the fixed income. So for finding the fixed income, so 10% of the total decisions are being taken based on this. And I think this is the survey, the practical survey. You will find that this is a source from Allied Group, AIT Group. So AIT Group. So their survey, how these algorithms they are using. And right hand side, as a estimated, you can see US people, the Europe, and the Asia. So this is heavily being used. And as we have seen for the fraud detection, so for the fraud detection also you can see it here, different kinds of frauds as we have seen one of the example. So here you can see you can save the our law means the you know if fraud is detected, then how much saving will be there, otherwise they have to lose. And identify, you can identify, and you can see the future fraud detection. And because of these algorithms, so you can see millions and millions of dollars are getting saved. That is one of the thing. And this is again Accenture research. This is Accenture research, Accenture group research as a source. As per that research, you can see robo advice capability. As we have seen the robo advice capability, and this robo advice capability, you can see the different segment, implementation solutions, purpose solutions, client advisor lifecycle, monitor results and adjust strategy, understand client needs. So everywhere, this robo advisor capability is being heavily used over here. Uh, and this is again the technologies like blockchain, AI, machine learning, Internet of Things, etc. The SaaS technology, as initially Himanshu Sher has covered a lot, are playing a major role in multiple arenas. And how do you see these emerging technologies lying in the roadmap for the future growth? So you can see the technologies, this AI-enabled technologies for cloud computing, the machine learning, the productive data analysis, data transfer protocols, natural language processing. So these are the currently you can see heavily used. So these algorithms are being heavily used in cloud computing. You can see then machine learning, then predictive. You see this is a self-explanatory. Again, this is from the Accenture group. So I think with this, we'll conclude the today's session over here itself. Just I will stop sharing. Still, if you have any queries, if you want to say something, you can put it in the chat box. Otherwise, we'll close it for today's session. Yeah, anyone want to say something? Please put it in the chat box, else we'll close now. Okay, then. I think over to Sai. Just go ahead.
Yes, sir. So thank you so much, sir. So once again, I would like to conclude the session, and I would like to thank all the participants for joining over here once again. This is our last week of our 1 month workshop, and on 31st of August will be our valedictory session. And the week quizzes, the 2 week quizzes that are remaining, will be sent on the WhatsApp group. So, sir, with this note, should I end the session?
Yeah, you can end. Yeah.
Okay. So, thank you so much, everyone, for joining. I will end the session now.
Yeah.